Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glen Sutherland.
Hello and welcome to another episode of A Canadian Investing in the U.S. This week I wanted to talk about how to increase your cash flow by 15%. This isn't any sort of phenomenal trick. It's just something that you actually have to do every year. I know that there's a lot of people that don't do it, and I didn't do it in my early days because I had fear that I would lose a tenant. But here it is. Here's how to get 15% more. Anyway, so first of all, you got to start thinking a bigger picture. Everything is costing more every year. So there's a thing called inflation. So as inflation continues to go up, your dollar continues to go down, the value of it. And it's arguable what the what the rate of inflation is. The general consensus is somewhere between 3 to 5%. When I was doing some research, some people were saying 3.6%. There's actually some websites I was reading that were saying it was over 5. But basically what you want to be making sure is that your rents are keeping up with inflation. So even if you lowball it and you say 3%, so as long as you're doing a rent raise of 3% every year, and I know there's a bunch of people who are still Canadian investors in Ontario, and they're going, well, I can't even legally do that. Well, there's another perk to going to the United States. So anyway, back to the point. I'm going to make a super simple example, and I'll show you how you can move it up 15%. So you have rent of $1,000 a month. Nice even number. Say that cash flows $200 after you're counting in your vacancy, your repairs budget. I usually put 5% for each in. Insurance, property tax, property management, mortgage. And say at the end you have $200 left. I usually like to buy properties that have $300 in, but let's just do a nice simple example of $200. So you're getting a cash flow of $200 from the property. So if you're moving your rent up by 3%, that just made $30 a month. And a lot of people don't raise their rent because they fear, for only $30 a month, I might have the possibility of losing my tenant, and I don't want to have to go through the whole tenant turnover, so I'm not going to raise my rent 3%. Well, maybe you will when you think about this. So just by getting that extra $30 a month, if you take 30 over your $200 a month, you've actually raised your rent 15%. You've raised your cash flow by 15%. So every year you're making an extra 15%. And 15% is a substantial amount to actually make. It's a small amount, but it's a small amount of cash flow for property, so it doesn't weigh out as much. And $30 isn't a sexy number. It doesn't sound like a lot of money. It doesn't sound like it's really worth it. But when you start putting a percentage-wise to it, and you start having to do this with all of your money, and all of your money that's out, is how it's efficient is it being, right? What is it kind of return is each dollar giving you back? And by just doing this simple thing, you're getting 15% more. But you multiply that by 10 or 20 or 30 properties, and it turns into something that's fairly substantial, especially year over year if it just keeps growing. But like as I was mentioning at the start, the dollar is losing value every year. So every month you're paying back the bank with money that's less valuable than the day before. So how do you beat inflation? How do you beat this whole inflation thing? You do it by getting loans that are secured, and you're going to be paying back with less valuable money in the future than what is currently going now. And you're locked into this rate. It's not like the banks can come back and say, hey, Glenn, inflation's went up a lot over the length of your loans, so we want to actually raise year over year 3% of what you owe us. It'll never happen. They can't do that. So you're locked into these term loans, and ideally you're looking at American financing with 30-year loans. In the distance of 30 years, I can't remember the exact number, but I was listening to this one podcast, and they were saying it was like 200% is what the difference that you can make in 30 years just from inflation. And that's why it's just an easy way to leverage against inflation is get loans. Let someone else take the get their payback back with the deflated dollar. Anyway, that was a lot of repeated rant, but if you're looking to talk to me, come find me online, Glen at glensutherland.com, or visit my webpage. Thanks for tuning in, everyone. Bye.